Nigeria's economy grows by 3.19% in the second quarter of 2024 on service sector. Foreign exchange turnover increased to 110.35 trillion naira in 7 months on dollar supply. Investors record 617.130 billion naira oversubscription in fixed income market, says Debt Management Office. And oil climbs on Middle East escalation fears, U.S. rate cuts expectation, as well as Asia-Pacific market mix as Middle East tensions rise. Investors assess Powell rate cut comments. On the program, we shall be taking a look at enhancing market access for MSMEs in Nigeria and beyond. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Musa Abubakar, your guide. Now let's bring you up to speed with business development. The Nigerian economy grew by 3.19% in the second quarter of 2024. This was mainly driven by the service sector. New data released on Monday showed Africa's biggest economy saw its gross domestic product grew by 3.19% year-on-year in real terms in second quarter 2024, from 2.98% in first quarter 2024 and 2.51% in the same period last year. According to the National Bureau of Statistics, NBS, the performance of the GDP in the second quarter of 2024 was driven mainly by the services sector, which recorded a growth of 3.79% and contributed 58.76% to the aggregate GDP. The GDP report further disclosed that the agriculture sector grew by 1.41% from the growth of 1.50% recorded in the second quarter of 2023. However, the growth of the industry sector was 3.53%, an improvement from minus 1.94% recorded in the second quarter of 2023. In terms of share of the GDP, the industry and services sector contributed more to the aggregate GDP in the second quarter of 2024 compared to the corresponding quarter of 2023. The Nigerian official foreign exchange FX market witnessed a significant increase in turnover, rising to 110.35 trillion naira in 7 months of 2024, about 171.46% increase from 40.65 trillion naira in 7 months of 2023. This is contained in the FMDQ market's monthly report obtained. Nigeria's foreign exchange market has witnessed a resurgence following the Central Bank of Nigeria, CBN, numerous policies, most especially the unification of the local currency. The increase in the foreign market turnover is a major boost that underlines growing confidence in the Nigerian economy and continuing reduction in liquidity risk. The reforms by CBN Governor Olayemi Kadoso has enabled the Naira to trade more freely against the dollar. The FMDQ exchange report showed an increase forex turnover, contributing significantly to overall financial instruments transactions at the secondary market. Now, investors seeking safe haven have recorded 617.130 billion in the fixed income market, as expectations are high that demand will persist with improved system liquidity. The Debt Management Office, DMO, offered 409.98 billion naira and had a total subscription of about 1.027 trillion naira. The oversubscription was skewed towards 364-day paper, while 91-day and 182-day had an oversubscription. The DMO eventually sold 291.03 billion naira, 29% lower than the amount offered of the 409.98 billion naira compared to the previous auction. The stop rate declined across all tenures at 18.20%, 19.20% and 20.90%. How much is the naira exchanging for other currencies? Let's find out. Now, to speak on how Nigeria can enhance market access for MSMEs is financial expert Kolawale Kainde. Thank you for coming on the program.
Hello, Musa Abubakar. It's a pleasure to have you, and I say a wonderful day to all our viewers all over the world.
Okay, beautiful. Well, talking about market access, it has been an ongoing conversation, and most especially when it comes to a very vital sector for the Nigerian economy, that's the MSME sector. At this point in time, I think this should be, at this point in time, various policies and efforts should be able to address some of this issue of accessing a market for small and medium-scale enterprise. What do you make of, let's say, the current administration efforts?
When the current administration came on board, the federal government came up with a lot of interventions, specifically speaking to the SME space. We found a presidential conditional cash transfer. We have the SME fund and also the SME fund for manufacturing. I think a total of about 125 billion or so was earmarked for that, for those interventions. Where are we today? We could say that from the fillers, we've been hearing people receiving the 50,000 naira across the 774 local governments. We've had also the Minister of Trade speak about some kind of a delay in disbursement of funds for the manufacturing sector within the SME space, as well as the SME space, talking about the people that have access to ₦1 million, up to ₦1 million or so. All in all, the government has tried to look at what areas will do, and that's just about access to finance, not really access to markets. And when you talk about access to market, you're talking about giving these businesses the ability to reach and sell to customers. You're talking about their competitiveness. You're talking about having an enabling environment that makes them thrive. And there's a quaternary of activities that go within that value chain. We talk about electricity, we talk about technology, we talk about R&D, and of course we talk about the people itself, talking about capacity building and all of that. So it's a whole gamut of what we've done. But what has the federal government done specifically? Of course, the government has tried to, one, reduce spending by increasing, by removing subsidy. Of course, you know what that means, subsidy in fuel, subsidy in electricity, and that has increased the cost of doing business. I heard about our growth. You see that our growth, according to macroeconomics, is an inflationary induced growth. These monies have come from outside the country, and of course, we see that the service sector still keeps playing a prominent role. That shows that Nigerians are becoming more intuitive, more resilient, and able to withstand and navigate the market waters of doing business in Nigeria.
Okay, with the business environment affected by inflation, just like you mentioned, and the cost of energy, how should business navigate through? And considering the fact that this is we're at a point where you can't say, okay, we will not do business because of this is with the challenges we're actually facing. How can SMEs partner the private sector as well as government, and to take advantage of we are seeing a development in the African Continental Free Trade?
Well, for SMEs, one of the ways they need to get out of this quagmire is to do shared services. In terms of, now there is so much talk about renewable energy, green energy, alternative energy, and the government has even given out a law permitting independent power generation. So we want to look at businesses coming into that space to offer alternative energy for SMEs. We know that SMEs, the manufacturing percentage of SMEs is about 15%. So I think they can move to off-grid, and I think a whole lot of them are doing that now. I think the Minister of Power even lamented that manufacturers are shifting away from the grid to off-grid because the cost of energy is just too high, and that's one of the problems. Another thing is that SMEs, because of the dynamic nature of SMEs, they can leverage technology, digital technology. Of course, cost of renting physical buildings are getting higher and higher, much expensive these days. Businesses should start to look up how to leverage technology, access platforms that the government have created. I know NIDA is doing quite a whole lot there. SMEDAN is doing a whole lot there in terms of capacity building. I think SMEs must now assess these opportunities and these facilities. But the most important thing is the issue of regulation of capacity building platforms and opportunities. The cost of accreditation continues to be high, and that means there is no democratization of learning for businesses. And most businesses just rely on the internet and little publications, but they are unable to access professional advices and advisors like us, or even, you know what it means to access the service of PwC and all of that. So the SMEs are effectively cut out from there. But even those big behemoths are also, they understand the role that SMEs play in the economy, and they are looking for products, services, and opportunities to bring them into the value chain and the ecosystem for growth and development.
Okay, well, we've seen SMEDAN playing a very important part in this particular space. What do you think are the key challenges Nigerian SMEs face in accessing most especially export markets?
Standardization, it's a major issue. Yes, SON, NAFDAC are doing quite a whole lot, but we know that.
But are they doing quite a lot?
They're doing their bits. Okay. Let me rephrase. But there is a whole lot more that needs to be done. Okay. But especially it falls on the producers. Agriculture is still the largest chunk of services or products that the SME provide. And despite the fact that Nigeria is a very big producer, a large producer of yam, our yam do not get outside the country because of packaging, labeling, and of course, we're talking about the issue of quality assurance, quality control. So for us to play in the international market, it's important that we get certifications, and I think NEPC has done quite a lot in ensuring that there are trainings for would-be exporters on how to get accreditation, even in line with the British Commission, but it's still like dropping a pin in the ocean.
Okay. But what do you see as the future trends in market access for SMEs in Nigeria?
We're looking at digital technology, digital marketing. You will be surprised, SMEs are leveraging artificial intelligence. And just look at the 3 MTT that the government has launched. That's a NITDA project. I also did a research on it. I joined to see how that flow was. What it's going to do is that it's going to make SMEs competitive and also do cross-border businesses, basically on the digital platform. But as for commodities, we're looking at how the SEC can come into play to make sure that we have commodity boards that are traded online, and have farmers have access to agricultural commodity sales and trading. So I think that's the future of where we're going to. And lastly, the government's also backtracking on cryptocurrency and blockchain technology, and that will play a pivotal role in the future trends of the markets, most especially for SME businesses.
Okay, what are the most critical factors that you think that needs to be addressed so that our SMEs can do better in both local and global markets?
I look at policies. That's the major driver for businesses. I spoke about the intervention that the federal government have given out. Imagine somebody getting 50,000 naira for the government. Somebody will say, is it for rice? Is it for gari? Because if you look at the cost of the purchasing power of 50,000 naira today, you can't, you know that it's nothing to really write home about. So in terms of finance, government needs to relook and rethink how much is sustainable and suitable for businesses to access. That's one. That, in terms of infrastructure, one of the reasons that we have post-harvest losses is because the roads to the markets are bad. And you see a lot of undocumented taxes from agberos and all of that. And they increase the cost of goods in the farms. The other thing that government should do, and they have already been doing, is to send farm rangers, forest rangers into the farms, so that they can ensure that farmers go back to the farms, because without that, Nigeria would not be able to sufficiently provide food and of course raw materials to drive industry.
Okay, thank you very much, Kolawole Kainde. It's a pleasure having you in the program.
It's always a pleasure coming around. Okay. Thank you.
Now, moving on, in line with government food security and economic diversification initiatives, the federal government has launched an agricultural initiative in Bayelsa State, Project Tear from the soil. The initiative aims to empower more than 500,000 smallholder farmers and those in agri-businesses around the coastal communities across the South-South region, highlighting Bayelsa's immense potential for large-scale rice production. With inspiration from the success of the Netherlands Senior Special Assistant to the President on Community Engagement, South-South Gift John Bull, says Bayelsa's capacity for rice production is a gold mine waiting to be fully realized.
Ensure food security, promote locally grown foods, and also diversify our economy beyond oil and gas. Our land's texture and capacity are well suited for large-scale rice production. However, it is not just about the land. It's about empowering our women to take charge of this potential.
Well, the project Earn the Soil, that's the initiative, involves the domestication of the National Women Economic Empowerment Policy, WE policy. Now, the European Union and the Federal Ministry of Agriculture and Food Security train farmers on smart agriculture to improve their yield. The Nigerian Agricultural Insurance Corporation described climate change as a major threat to food security in Africa. Farmers are encouraged to adopt early maturing seeds and to ensure their farms in case of losses. It is emphasized that the inconsistency of rains this year in some states will affect farmers' output due to drought, with floods being recorded in some parts of the country, destroying farmlands. The situation, which is likely to be worse.
Not accessible even for animals and crop farmers. Then livestock productivity declines.
The objectives of this workshop will no doubt enhance participants' capacity to contribute effectively to the federal government's renewable agenda by ensuring food security and reducing poverty. Additionally, it will empower farmers to adopt sustainable measures to combat the effects of climate change in their various enterprises. And I want to say that it's not just only direct empowerment.
So what we hope to achieve is to be able to teach our farmers what to do and how to take out insurance. That they must encourage them to take out insurance and how to adapt and adopt the climate change. That's what we hope to achieve, so that we can sustain agriculture in the renewed hope agenda of Mr. President Bola Ahmed Tinubu.
Now here's a summary on how stocks fared in Nigeria last week, as put together by Olayinka Ojo.
All share index and market capitalization depreciated by 1.162% to close last week at 95,973.45 basis points and 55.129 trillion naira. A total turnover of 5.641 billion shares worth 33.052 billion naira in 42,006 deals traded by investors on the floor of the exchange. The financial services industry led the activity chart with 4.977 billion shares worth 17.877 billion naira in 19,064 deals. The oil and gas industry followed with 179.469 million shares worth 8.954 billion naira in 5,780 deals. The third place was the services industry with a turnover of 123.505 million shares valued at 525.417 million naira in 2,436 deals. Trading in the top three equities, namely Standard Insurance PLC, Jais Bank PLC and Guarantee Trust Holdings Company PLC, accounted for 3.951 billion shares worth 7.947 billion naira in 1,839 deals. Total of 98,004 units of exchange-traded products valued at 62.225 million naira were traded in 207 deals. While at the bonds market, a total of 101,335 units valued at 88.825 million naira were traded in 36 deals. On summary of price changes, 43 equities appreciated in price during the week, 34 equities depreciated in price, while 74 equities remained unchanged. Olayinka Ojo for Business Express.
Well, let's now head to global stock market, where Maria is standing by with the update on what's happening on the first weekday of the week. Maria, you're welcome back. It's good to see you. Let's have the numbers. I hope you had a great leave. Now that you're back, let's have the numbers.
Yes, of course. It was great. Thank you. The numbers are mostly bullish on the global market in Europe. In Europe, traders digested rising tensions in the Middle East following strikes by both Israel and Hezbollah over the weekend. DAX opened lower at 0.20%. We have FTSE going higher at 0.48%. We have the CAC reflecting this at 0.17%. Moving to Asian markets, China's central bank will release its medium-term lending rate on Monday, while Singapore will publish its manufacturing data for July. We have the Nikkei, which dipped 0.66%. Shanghai Composite went up by 0.04%. Hang Seng Index was up by 1.06% also. U.S. stock futures are bullish as investors look to push equities back to record high levels, now that the Federal Reserve indicates that the rate cuts are forthcoming. Dow futures bustling higher at 0.06%. We have the S&P 500 higher by 0.15%, and the Nasdaq Composite also up by 0.12%. African markets are mixed. A look at South Africa JSE Top 40 shows the index lower at 0.03%. We have the Tunisia Tune Index down by 0.18%. Namibia All-Share Index was up by 0.18%, while Ghana was marginal at 4,353 basis points. I am Maria Ado-Zakari. It's all you, Musa.
Well, thank you very much, Maria. This is where we end this edition of Business Express. We value your feedback, so keep the comments and observations coming. Be informed that all previous episodes are available on YouTube on the NTA's channel. Business Express returns tomorrow by 9:30 a.m. I'm Musa Abakar. Enjoy the rest of your day.